Know of other leapfrogging technologies that Africa has embarked on. One thing that struck us about Africa a great deal is how innovation and technology is not pursued for its own sake, but to solve people's problems. And to solve the problems of the last and the least in society. To come up with solutions that meet their needs. Needs in places like Singapore tend to be a little bit more sophisticated, and with that, needs are also a bit more complicated, not always easy to meet. But this thing about meeting basic needs struck us a great deal. And the region in which we operate are also developing countries. Indonesia, Malaysia, Thailand, Philippines, Vietnam, Cambodia, also at roughly similar levels, maybe just slightly higher than countries in Africa. And the work we do needs to be relevant to them. And so I think the settings were ripe. And I guess then life has a way of creating fortuitous opportunities. Senior Minister Tharman came here, met Patrick. He came back and told me Kenya is a good country we should partner with. They've got good ecosystem, very committed government and public officials, and an excellent central bank and governor. So when the next opportunity came up, we connected. We had a good conversation, and I invited Patrick to Singapore for the Singapore FinTech Festival. He did a fireside chat, which went very well, and we had further conversations. And I think instinctively and intuitively, we both understood that we could work together. So I suggested, maybe we can bring Africa and Asia, not just Singapore and Kenya, but Africa and Asia together to explore opportunities in fintech on this theme about how to make lives better using technology and create this synergy. And the rest, as you say, is history. We had lots of interactions and interchanges. I think Sopnendu is a key player in this, coming here very often. And collaborating with our friends here in the Central Bank of Kenya. And there you have it, the first Afro-Asia FinTech Festival, which has brought our continents together. I'm very pleased that there are quite a number of Singaporeans here who would otherwise not make the journey, but having made the journey, and I was talking to several of them, they are so glad to see kindred souls and spirits working on solutions, trying to solve similar problems, maybe in slightly different settings, and most of all, the opportunities for connections. So this has been really heartening, and this journey hasn't taken very long. It's amazing how so much has been done in such a short time, and we're all very hopeful and confident we can continue to build on this.
Thank you very much, Ravi. Dr. Patrick, the story of the Afro-Asia, you could have, as the Central Bank said, well, I don't think we are prepared enough to host the inaugural summit. Can you give us more time? But, we're here. Your story of the conversation that began with the meeting with the senior minister, and now here we are at the first, festival.
Thank you very much. Actually, I think for me it has been a story of surprises, meaning the opportunities came up in the context of conversations, as Ravi just now mentioned or explained. And what I remember distinctly is how quickly we connected. First and foremost with the senior minister. We actually had long conversations twice on this matter and others, but the connection was not just on the surface, it was actually very deep. Connecting in terms of the objectives of Singapore, and indeed the institutions that he represented, and also ourselves. So it wasn't just on fintech, but I think fintech became a pretty clear area where we could expand our collaboration and so forth. It's interesting for me to reflect on the connection, or let's say how we saw things in terms of the need for collaboration. And obviously, Singapore was many steps ahead of us in terms of maybe the fintech or the technologies that were being used. By the way, that was a time, for instance, when they were already working on a project they call Obian, I think it is, on the DLT, on blockchains and things like that, which was several steps ahead of us. But I think the point is in terms of the substance, what is driving them, we connected very well. From our perspective, we obviously support and really appreciate collaboration. As you know, there's that saying that along the lines that if you want to go far, go with somebody else. And so here was Singapore wanting to run with us. And we obviously felt that this, as Ravi said, kindred spirit was there, and therefore we could get there. I guess the point of how quickly we've come in such a short period of time, how far, how quickly, I think those are the things we kind of today will kind of sort of say, wow, how far, we are amazed by it. But I think it shows the commitment of the people that have been working on this project. And today, obviously, it's a success. But I think the point here is if we apply that same spirit, which is exactly what the sense of the memorandum of understanding that we signed yesterday and the commitments that were underscored or highlighted yesterday, both from the central bank, the level of the central banks, and also at a much higher level from the perspective of, say, the president and indeed the senior ministers. So I think the point here is that if we apply that same spirit going forward, we will get where we are going. We'll go far and at a pretty fast clip.
All right. So to both of you, here we are at the this FinTech festival. So amidst this revolution, digital revolution. So artificial intelligence, big data, the Internet of Things. What's the role then of the central banks in this conversation? If I could start there.
Well, briefly, I think there are several points one could make. First and foremost, I think, let's begin. We should not be afraid of the problem, of the question, or the questions that arise in this area. So we are not tech experts, but we have a responsibility as central bankers to first and foremost, to maintain or to preserve financial stability. So that is our first responsibility. And as we look at that, we expect that all the issues that come from that you just outlined will in some way affect us or afflict us in particular ways. So we need to get to it. But we should have courage. We should have a sense of, yeah, we'll figure it out as well. We'll apply ourselves to it and we'll figure it out. So that's the fundamental point. Secondly, the responsibility of the central bank is also to, let's say, guide, or should we say, provide a sense of direction from its perspective of stability in the financial sector. And so even as we, and sort of set the red lines, as it were. And so in a sense, we do need to work with everyone else and while setting these red lines. One of the powers of the central bank that is least known, I think, is their convening power. I mean, you can see we are all in this room. In effect, the meeting or the festival has been convened by two central banks. And even though we don't regulate the fintechs in the room, they are here. So in that sense, we do have that obligation of convening those that are responsible, because the danger is if left unattended, it will be a huge risk later on, let's say in 5 years, in 10 years, and all that from the perspective of the financial sector. It is important to also say that it's not just financial stability. There's also the issue of financial literacy. We talked about, and indeed also, let's say, inclusion. Those are concerns that are now very much in the minds of central bankers, and therefore we do need to think about those as we address these questions. The point I would also make is we need to collaborate. We cannot solve the problem by ourselves. And in that sense, this is why we are happy to work with Singapore and also other central banks around the world, including, say, those central banks from the advanced economies, which may be further ahead in terms of, let's say, asking, or should we say, checking what's going on in some of these areas.
Ravi, I wanted to ask this. There's a lot of critics, and I'm sure some might be in this room. There's critics about the disruptions that are happening, how technology moves quite quickly and changes, evolves a lot. And there's those worried about issues of cybersecurity, issues of data protection. What would you say to that?
Yes. And those are very real and valid concerns. So, just if I could step back, let's start with the most fundamental thing that we need to look out for, and that is about trust and confidence. Trust is the foundational feature, the social glue that keeps societies together. It is also the foundation on which strong financial systems are built. Because if we lose trust in the system, what's the first thing we'll do? We go to the bank and withdraw all our money. Money stays in the banks because we have trust and confidence that the money is safe, it is not being squandered, that the banks are managing the risks, there is a regulator and a central bank overseeing them, and there are prudential rules in place. When you lose confidence in that, it falls apart. The same applies more broadly for all applications of technology, whether it's artificial intelligence, data analytics, and use of data. We allow it, we embrace it, we celebrate it and benefit from it because we have trust that our data is protected, that it is secure, and is used only for purposes that we regard as legitimate. So that trust and confidence are absolutely critical. And that's what regulators like the MAS and the CBK are focused on. That's our day job, as Patrick put it yesterday. Keeping the system stable so that people trust and can transact and go forward. But that should not stand in the way of experimenting with new things, right? The safer thing to do is to sit still, but actually that's not safe because events will overtake and disrupt, and then you get into risk. So you need to combine stability with dynamism. You need to combine safety with innovation. And that's not always easy. And so this is why there's a need for a continuous dialogue between the regulators and central banks and be it the fintech community or even the regulated financial institutions who are now increasingly moving into fintech and technological disruption, to have honest, open discussions about how new technologies are going to be applied, how the risks are going to be managed. And I think as long as both sides come to an understanding of one another's concerns, because naturally if you're an entrepreneur or a startup and you have a solution, you're excited about how you can make it as widely available as possible to as many people to harness its benefits. Now we share that, but we also want to make sure that the interests of the consumers are protected, that data is secure, data is private, that cyber and technology risks are well contained. So we can't have innovation without safety. We can't be a smart nation without being a safe nation. And addressing issues relating to cybersecurity and addressing issues relating to the responsible use of data, the responsible use of artificial intelligence, so that it does not create unintended consequences, social dislocations, exclusion, and other ills that are very possible if we do not anticipate and address these issues up front. So I think there's a need for this continuous dialogue and open mind on both sides. And I've seen it work in practice. I've seen it happen very often. When cloud technologies first came on board, we were quite ambivalent. In fact, I would say apprehensive, because a cloud operates very differently from a standard server. And all our rules and regulations relating to technology risk management and outsourcing arrangements were developed with that model in mind, mainframe servers and so on. And with a cloud, data is commingled. You're not sure exactly where it is. And so the rules had to be adapted to the new reality. But the new reality also have to adapt to the concerns, the very valid concerns that regulators have. And so many of the cloud service providers we spoke to, once they understood our concerns, adapted their solutions to fit our objectives, prudential objectives, which are for a larger social purpose. And we on our part had to be also flexible in how we phrase our rules so that it focuses on the outcome rather than the method. And so we had to allow different methods and different ways of achieving the same outcomes, be it through a cloud or a non-cloud solution.
Thank you very much, Ravi. I'll come to you, Dr. Patrick. Let's discuss something that's very critical in this festival about social impact investing. And this is where many have been looking at how technology can come in and how these central banks can drive technology innovation around providing solutions for the SMEs, and how you can then connect the financial sector or the banks and the SMEs in providing capital, but also innovations in their space that provide for employment of our people, but also provide for an income and drive entrepreneurship on the African continent with an Asian perspective.
Okay. How much time do you have? 3 hours, maybe? You see, this is an interesting question and can be answered in all sorts of ways. I think first and foremost, just full disclosure, some of us, me in particular, and I'm sure others in this room, came to whatever profession we serve now, myself as an economist, because of concerns about social impact, or should say wider social concerns. But that, be that as it may, the point today is there are those of us that want to make an impact, positive impact that is, on society in particular ways. But I still think the numbers that people look at, and these are, say, NGOs and things like that, you think also about, say, your standard social corporate responsibilities and things like that. The numbers are small. Let's be honest. They don't have the firepower, they don't have the scale, and they can hardly be scaled. But it's true they're making good social impact. From our perspective, we have to look at, say, the country. You talk about SMEs. Okay, in Kenya, for instance, SMEs are the backbone of the economy. The economy runs on SMEs. And if you look into other countries as well, Singapore, for instance, has done phenomenally well with SMEs. But that's a few years ago. Today now, the way one would look at SMEs would probably be different from the way, if you want to make an impact on them, the way it was done, say, 10 years ago, and so forth. But the point is that the scale is huge. So here comes the issue. How do you impact, how do you provide support, how do you provide direction for, let's say, 7 million SMEs in Kenya? That's the question. So you are no longer talking about social impact, in my view. You are talking really changing the entire economy, the organization of the economy. That's no longer just 10,000 people in a particular location or county and things like that. And I think those are the questions we are grappling with. The issue of scale is so important. And I think the point is we have a good tool, fintech, a good set of tools. They may help, but on the other hand, they may hinder. So I think this is where we need to have that conversation and see how is it that we can use whatever tools we have today, fintech being one of them, to change the structure of the economy so that the 7 million SMEs in Kenya, or for that matter, the SMEs all over Africa and indeed also in Asia, can actually leapfrog, meaning move to a much higher level in terms of operation, in terms of incomes and impact on the people that are involved and so forth. So just to give an example, this is a question that we've been struggling with here in Kenya. And we did look around, and in the various fora that we are involved in, we've talked to a lot of people that are there and their experiences. And in the end, we have seen that one of the issues that need to be dealt with is providing credit to the SMEs. It's not the only issue. There are much more fundamental issues, including the issue of dignity, and also talent, sort of improving, upscaling their talents and all that. So there needs to be a package that actually delivers all that in order to impact positively the SMEs. And so actually from our perspective, we've also used our convening power and brought together some banks, and they have put together a product which we think will lead to, once it's launched and once we layer on it other services like training, as I mentioned, it will really impact positively on the SMEs. So I think the general, I mean, in sum, what I would say is that it's using the same sort of approach, which is we have a problem, we have some solutions. By the way, the solution to that is very much an AI solution, because, so that's the fintech part of it. And I'm sure there are others in this room that know that, can explain it better than me. But the point is that you're using information that is being generated by the SME in terms of its transactions, all these transfers and payments that are happening, say, on your mobile platform, and using all that information to actually figure out the ability to repay or the credit worthiness of the particular institution, and then work with that institution, that SME, going forward. So there's a lot of excitement there, and I think I look forward to talking a bit more about it in the next Afro-Asian FinTech Festival.
Thank you, Doctor. Ravi, same question. How do we harness this technology, these innovations, to drive the humanity Colbert was talking about, to be able to remain human after all and not think about the profit margins, but how do we create social change in our communities, the communities we live in, so there is actually the technologies that support all the infrastructure, call it the ecosystem as you were mentioning, so that everyone benefits from it.
Mm-hmm. Mm-hmm. Yes, so the great attractions of the so-called fintech movement, and when I say fintech, I don't mean just the fintech startups and firms and entrepreneurs outside of financial services, but there's a fintech movement within financial institutions. Many banks, insurance companies, and asset managers are stepping up to this phenomenon. One of the most attractive things about this phenomenon is, right from the start, you see a very strong emphasis among the people who are involved in this space, a strong affinity towards the values that we just heard about, serving a larger social purpose, serving a broader swath of humanity, and especially serving those who are excluded, to help enable them to participate in the economy and improve their lives. And at the same time, there is profit opportunity there, which makes it commercially viable and economically worthwhile to do this, by looking at non-traditional sources of data and so on. I would say that regardless of a country's stage of development, and these are not problems unique to Africa or emerging markets or developing countries. In all countries in the world, there are excluded classes, excluded sections. When I mean exclusion, I don't mean just exclusion from having a bank account. I mean exclusion from having the wherewithal to manage your finances in a prudent and smart way. And on this score, I think whether you're a rich country or a poor country, we all can do a lot better. So I'll just give two examples. SMEs. most of the time we present the SME problem as one of access to financing. And that is one problem. That is, of course, a real problem because traditional lenders use traditional data sets, credit history, and track record before they can make a loan. It's the same model they apply to serving a large company, which they apply to a SME or a startup, which doesn't work. And I think what we've seen in the fintech movement, and as Patrick just elaborated, so I'll be brief, is the ability of new players coming on stream who can access a much larger set of data with many more touch points and taking advantage of these touch points to make an assessment of the creditworthiness of the borrower. And this is why you see in China, these platforms or players like WeBank are able to lend 100 renminbi overnight basis. No bank, no traditional bank is able to do that, to lend 100 renminbi, which is $15. Try walking into a bank and asking for $15 for an overnight loan. They just don't have the apparatus to deal with that. It's much easier to borrow $50,000 and show them your collateral and your salary slip and your purpose for borrowing and how you're going to repay it. The banks can handle that. But I need working capital to pay my supplier overnight. I'm short of cash. I need just 100 renminbi. The new technologies available now allow us to do that. Allow us to do that in a safe way, in a secure way, in a way that empowers a much larger group. But I want to add that it is not just about financing. And this goes to a larger question. The social purpose. Don't try to sell an SME or an individual alone. Try to sell him a solution. What does he want end to end? Many SMEs want more than just financing. They want end-to-end solutions. How can they optimize their taxes? How can they pay their taxes? How can they manage their supply chain, their accounts receivables, their invoices, their electronic payments? You need comprehensive end-to-end seamless solutions. And that is the challenge that solution providers need to take on. So don't sell a loan, don't sell a mortgage, sell a solution. Sell a solution that meets the borrowers or your customers' comprehensive needs. And I think this is happening slowly. We've learned a lot from the big tech companies who are not trying to sell you a product, but who are trying to sell you an experience or a solution. And I think more banks, insurance companies are stepping up to that plate, and many fintech players are stepping up to that plate. And that is a very good sign. It also goes to the individuals. When we talk about the unbanked and the excluded, I guess in places like Africa, you talk about those who do not have a bank account. In many of the other countries, including Singapore, virtually everyone has a bank account. But are they really financially included? Are they using their finances wisely? There's a statistic in the UK, more than 50% of the people do not know how compound interest rate works. And this is a perennial problem in many countries. People borrow too much because they don't know the effects of compounding interest rates, long loan tenures, and the impact that stress events like a loss of a job or a depletion in your wages can have on your ability to service that loan. And so crisis after crisis has shown people in very rich affluent societies borrowing too much above their means because they simply have not factored in what it means to borrow and what are the consequences of borrowing and what is responsible borrowing. But for responsible borrowing, there needs to be responsible lending. And this is where I think technology offers solutions. I would like to see solutions where you can track your expenditures, you can track your savings, you can look at your portfolio in its entirety, you can look at your retirement savings, you can assess how much progress you're making towards your retirement savings. You can stress test your finances and your portfolio against certain events and see if you're resilient. This is intelligent financial planning. And even in the richest of countries, this is not happening. Fragmentation of services and so on. So I think these are the challenges that fintech can solve, providing comprehensive, holistic solutions that serve a person's life cycle needs in a way that is prudent and beneficial to him.
Thank you very much. I'm really hoping the bankers in this room have listened to what Ravi just said. Other than the interest you keep piling on our loans, please think about us also. So just to show you that the app is working, governors, I wanted to pick a couple of questions for you. So I'll begin with you, Dr. Patrick. So Jared Oyer is saying to the CBK governor, are unregulated digital lenders a threat to Kenya's financial sector? If so, based on CBK's estimates, how long can they go unregulated before the negative impact is felt?
At this moment, the unregulated credit-only lenders, deals, digital lenders on here in Kenya, there may be many in terms of numbers, but that's not the best measure. The best measure, first and foremost, is how big are they relative to other institutions. And in that sense, they are less than 1% in terms of lending through those platforms. Again, these are a rough estimate because they don't report. So it's not like we get regular reports. But our sense is that they are not that large relative to lending by commercial banks and things like that. But I think the point is, like everything, if you have an illness, you don't wait until this thing is choking you. You have to deal with issues, concerns early when they are emerging, so that you can have an effective transition to something that is more sustainable and things like that. One of the points we've made recently is that they are unregulated, and therefore concerns such as they are unregulated because there is no law today that captures them. There are some laws that actually one can say in the sort of penumbras of those laws, they are captured, but we can have that conversation later. But I think the point is that they are not, they don't have a regulator that is assigned to them at this moment. And what has happened is the concerns, say, for instance, about customer concerns, and those are not taken care of. So you are in a sense at the mercy of the institutions. That is something that obviously we cannot accept as a society, because I, as a borrower, should expect the same customer experience in terms of respect, in terms of all those things, as when I borrow from a bank, as any other lender, in this case, the digital lenders. The other area which is of great concern, of course, is how they use the information in terms of data security, even cyber security and things like that. There are concerns there which obviously need to be dealt with. And of course, you don't know where they're getting their money from. So concerns, let's say, on AML, I'm talking of now anti-money laundering, and even combating of financing of terrorism. This could be a standard, very standard money laundering operation, and you'll never know. So I think all those concerns are there, and therefore this is why we've, and I think most people would agree, even they have agreed in particular ways, that we do need to regulate them. Now, the way you regulate them need not be the same as, or shouldn't be the same way you regulate a bank. So for instance, the prudential indicators or requirements will be completely different because their model is different. You're not protecting somebody's deposits because the finances will generally come from them in particular ways, but it needs to be clear where it's coming from and so forth. But I think there has to be a particular, let's say, direct level of regulation to cover those. So I think that's what I would say on that.
All right. And Ravi, there's a question, and feel free, Dr. Patrick, to pick this also up, because Philip Nyamwaya says, what operational frameworks exist within the central banks in both Singapore and Kenya to ensure that there is fair and equitable playing field for commercial bank-led and non-commercial bank-led fintech players?
Yes.
It's a bit selfish. We would be talking about commercial-led.
Yeah. No, this is a valid question. It comes up all the time. What are we doing to ensure a level playing field? So I think there are several dimensions to this. One is similar activities ought to be regulated in a similar way, right? So if you're carrying out a similar activity as a regulated financial institution, then you should be regulated in a similar way because the same prudential concerns and considerations apply. Now, we need to be also practical. And so we apply a materiality or a threshold. Now, if you are in the business of lending and lending large sums of money to a large number of people, then obviously the regulations that apply to lending must apply equally. But if you're just lending to a few hundred people in a closed community, small amounts of money, that's a different matter. If you're offering a payment service through the internet for small sums to pay for merchandise that's relatively restricted, that's something that you don't probably want to regulate in the same way that you would regulate a PayPal or a much larger payment service provider. So we establish materiality thresholds to see if you're keeping only a few $100s in your e-wallet, that's treated quite differently from something that's much larger. So I think we need to look at the underlying activity first, and second, establish materiality thresholds. And when those thresholds are crossed, then we need to ensure a level playing field. And the reason why we want to do that for both sets of considerations is because it is risk-based. What is the risk that a player poses to the system? When a player becomes large, then they pose a very similar risk and they should be treated the same way. If the player is extremely small and just starting out, then we can afford to have a bit more leeway for them. And they don't threaten the big players in the same way. But as they get larger, we need to actually bring them into the regulatory ambit so that the risks are well addressed. So this is more art than science. There are no hard, fast rules. Of course, some of the smaller players always think that we are a bit too strict with them. And the big banks think we are letting them off rather leniently, the smaller players. So usually in public policy, if there's unhappiness on both sides, it's a good sign you've pretty much got the balance right. But we learn as we go along and want to make sure that in applying regulation, it goes back to the earlier point, the primary purpose is to ensure trust and confidence. Consumers have trust and confidence, and at the same time allow innovation for new solutions that come up without being hindered by excessive regulation.
May I interject on this? Thank you, Ravi. But I think maybe now I go for the jugular, if you may, right? I think there's a misconception out there that it is us versus them, meaning banks versus fintechs, right? I have a fintech with three of us, me, my buddy, and one other person. And it's we against this big bad bank. I think that's a misconception. You can actually collaborate with that big bad bank from your perspective. Or the big bad bank can actually, well, maybe I shouldn't say bad, but that big bad bank from your perspective can work with you. And we've actually seen this happen in our own jurisdiction. There has been many instances where the bank is looking for a particular solution, and a fintech has actually proposed that solution to the bank. And that solution has actually been embedded in the sort of the framework of that bank's operation. So I think to sort of think of the banks, big banks versus fintech is somewhat of a misconception. But maybe you're, the questioner is thinking, I presume he's Kenyan, and he's probably thinking that he saw the governor. Yesterday, I think we saw the governor dancing here, which was quite a... but I think there is an instant where the governor also danced while they were launching a particular product. This is a Stowie product. Now, I'm saying that in jest, but the point is there are some specific... The central bank can also, let's say, give direction using its convening power about the impact of some of the products. And I think this is probably what he's also referring to, because in some of the products, For instance, yesterday when we were walking around there are some products that jump at you that will have significant impact because there is a gap that they are feeling. We talked about, for instance, the pension products. We've talked about, say, the minimal medical insurance packages that maybe some people are putting out there. All these are things with substantial impact in society. And so it is perfectly okay for the regulators to sort of say, hey, this area is particularly important for the community based on whatever the information is available to them.
All right, we really have run out of time. I know Dibal and Wallace must be cussing me, but I really wanted to ask, and this is a question you asked this morning. So the fintechs are in the room, the bankers and financials are here in the room, and the question was, where do we go from here? And that was asked this morning. I thought it would be good to give it to the bigger platform. Yeah. Ravi, you want to help with that? Where do we go from here?
Where do we go from here is not the next event, right? That may be important, but that is not the most important. Where do we go from here is, I think, the connections that have been made amongst the people who attended, the 2,000 people who gathered here and had conversations and made acquaintances, made friendships, and made connections. That's where we need to go further. Make those connections real, come together where there is an alignment of interest, objectives, and similarity in approach, and opportunity for synergy. Come together, make things happen in your own small ways. Because what the central banks can do is to provide a forum and a platform for such exchanges to take place. Our encouragement, and where necessary, also our endorsement for solutions. But really, innovation doesn't take place among central banks. It takes place in the community. And this community that is taking shape here, bringing people from all across Africa, and bringing some people also over from Asia and from Singapore. I think these connections are valuable. They don't happen naturally because of distances and unfamiliarity. But now that these connections have been made, I would strongly urge you to get together, to synergize, to make solutions that are relevant in your respective markets, learn from one another, adapt your solutions. Those of you who have good solutions and who want to expand into Asia, to sell things in Indonesia, which have in many parts of Indonesia have very similar profiles. The collaborations that you can make with a Singapore player or another player in Asia as a way to introduce into these markets. And for the Singaporeans who are here, where do you take this from here? This huge continent, still in a pioneering stage, lots of potential, a burst of entrepreneurial and innovation energy. See how you can tap onto those energies. Bring off what you can over to this side and see what you can do. So I think there's lots of scope for taking this forward. So it's not so much the next Afro-Asians FinTech Festival. That's not where we take it forward. And I also forgot to mention, financing and capital are very key ingredients of the ecosystem. So to all our African colleagues here, I would strongly urge you to come, and this is an open invitation to the Singapore FinTech Festival in November this year. Do come, check out the scene. One of the things that Singapore is fortunate and blessed with is that we have quite a vibrant financing ecosystem, venture capitalists, private equity players, and so on, looking for good ideas that make a social impact and yield a good economic return. And that may be an opportunity also to seek out those players. And we will provide, as I said, the platforms, the deal-making platforms, the matchmaking avenues, and so on, to bring money and ideas together. But we can't make the match, because that's the last thing you want a central banker to do, because we know nothing about this, right? But the people who have the money and the people who have the ideas, they know what can work together. So do come together, seize these opportunities. There's a lot that can come out of this.
Doctor?
Yeah, I can only associate myself with Ravi's comments, but just to say one or two things, in a sense, to highlight. I think a lot of us will go back, the fintechs and others will go back to their businesses, first with a sense of encouragement. So this sense of, yeah, we can actually take the next step. We are not in the dark by ourselves. There are others like us who are struggling with the same questions and things like that. I hope that what they've learned from this conference, this festival, is also something that that will make them say, well, I think I do have an element of a solution, or I have a sharper problem. I've sharpened the problem, and I have an element of the solution that I can continue working with, collaborating with others around the world, some of the people that I met in this festival and so forth. But I think at the end of it all, it will be a sense of that there are others that will support us along the way. I think that is very much the key idea. And how you do that will vary, but it is in your hands in terms of the outcome, the solution. So the others that can support us, Ravi just now mentioned the issue of financing, which has always been, in a sense, like completely unsurmountable hurdle for some of the fintechs. I think they'll go back saying that's not the problem anymore. I can get the financing if I do my proposal correctly and all that. And it isn't writing the proposal, it's actually preparing the product, sharpening the idea and all that. There are avenues, but I'll need to present myself through those avenues to get financing if I have a sharper product and so forth. At the end of it, it's about our collaboration. And I think for the central banks, we will cooperate and we'll collaborate as we signaled yesterday. But aside from that, it's also appreciating that it has to go back to the community. The word was Ubuntu, the opportunities that we present to others. And I think that that's the fundamental point in all this, in the conversation, at least for me. So I just look forward to fast resting. Maybe I'll take a two days off or something. And beyond that, I think we'll look forward to seeing what has been started, what has been planted, germinating into a huge tree.
Ladies and gentlemen, the governors, Ravi Menon, Dr. Patrick Njoroge,